Nothing goes straight up or straight down. Gold could have a big correction. It could go down $200-300 an ounce, but it's still way up there. So let's say it goes down $300 an ounce. It brings a, let's say it goes down to 2,000, like 2,600. What was it in 2024, January? $2,041. So it's still up. There's going to be corrections. Nothing goes straight up or straight down. But long term, we're very positive on it.
Gold prices reached a new all-time high against the US dollar on Wednesday as global stock markets declined following President Trump's announcement of 25% trade tariffs on automobiles, pharmaceuticals, and semiconductors starting in April. Adding to market uncertainty, Trump also blamed Ukraine for Russia's full-scale invasion, which is approaching its third anniversary in just 5 days. Since the escalation of Russia's war in Ukraine, which extended its 2014 annexation of Crimea, the price of gold has surged by over $1,000 per troy ounce. London's spot market peaked above $2,946, marking another milestone in its historic rally. Throughout 2024, gold set 38 new record highs, matching the peak levels of 2011 during the global financial crisis and the volatility seen in 1979's surge. In 2025, gold has already broken 11 new daily records in London's benchmarking auctions. Gerald Celente, publisher of Trends Journal, describes 2024 as a strong year for gold, driven by inflation concerns, geopolitical instability, and economic policies such as tariffs. These factors continue to push prices higher, reinforcing gold's status as a safe haven asset amid global uncertainty. However, gold prices pulled back slightly during the North American session on Wednesday, after the latest Federal Reserve monetary policy minutes revealed a unanimous decision to keep interest rates unchanged in January. Gold dollar traded around $2,925, down 0.31%. The minutes indicated that Fed officials viewed the risks to their dual mandate as balanced, though some policymakers warned that shifts in trade and immigration policies could slow the disinflation process. Additionally, certain inflation expectations had risen in recent weeks, further complicating the Fed's outlook. Despite the potential for short-term corrections, possibly declining by $200 to $300 per ounce, Celente maintains that gold remains significantly above past levels. Even with temporary dips, the long-term outlook for gold remains bullish as economic and geopolitical uncertainties persist. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Well, if you're going to talk about geopolitics, how about oil prices? Well, Brent crude is, it's been hanging around the $77 a barrel for Brent crude. Could that change? Well, if the economy keeps going down, the prices will go down. Oh, yeah, but how about the war in Ukraine and the Israel war? How about if they go to war with Iran? It's going to rack up oil prices to Brent like about $130 a barrel, and that'll crash the equity markets and the global economy. Could anybody forecast where it's going? Well, we look at all the data coming out, and one week they say we got to bomb those Iranian nuclear plants, and the next week they say they won't. So you don't know what they're going to do. So we're looking at that, but looking at the whole picture, there's a global slowdown. You're seeing country after country, except the United States, lowering their interest rates because their economies are going down. The UK, India, the ECB, Europe, one after another lowering interest rates because their economies are going down. The media is calling, for example, what's going on in the UK, they're calling it stagflation. It's not stagflation, it's dragflation. The economy is going down, inflation is going up. So what does that mean to oil prices? Well, less demand. Yeah, but if the wars go on, oil prices are going to go up. Oh, and they put sanctions, right? Trump just put sanctions on Russia, more sanctions on Iran to stop selling their oil. So you don't know how this game's going to play out. It's a freak show because the freaks are in charge. You look at the cover of our magazine this week. It's the politicians are zookeepers and we're just animals in a cage. That's all they look at us as. Hey, I'm the president. I'll tell you what to do. And listen, everybody out there, shut your mouth. You have no right to think for yourself or speak out unless you're a billionaire. I got to hear the crap spewing out of Musk's mouth every damn day. Hey, shut the hell up, you little guinea from the Bronx. I'm Musk. I'm the richest man in the world. You're just a piece of shit like everybody else out there. You got it? So you ask me where things are going. You got a crime syndicate running a country near you. And that's the word as I see country. That's the way it is. So now you go on to gold prices. Whoa, what's one of your top trends for 2024 from the Trends Journal? Oh, a golden year for gold. Oh, gold only went up 25% last year. And now look how it's skyrocketing. How come? Again, tariffs. And again, whether you're for or against them, not the issue. Concern about inflation going up, geopolitical unrest, and that's where you see things going. So that's the picture. And we got a guy that's no president in modern history is more authoritarian than Trump. And again, I can't stand either one of them. To me, it's a crime syndicate. And by their deeds, you shall know them. What's your favorite war? Hey, I'm a bankster. Yeah, we screwed up the country with the when the dot-com bust, not the dot-com bust, the housing crisis. Hey, you don't have a job? You got no money? You're deep in debt? Don't worry about it. Sign over here. You can't get a subprime mortgage. And what did the banksters do? The Federal Reserve gave them $29 trillion, according to the Levy Institute of Bard College, to bail out the banksters. They're a crime syndicate. You could go broke. Who the hell cares? I don't give a damn. Hey, but I'm Jamie Dimon. We're only convicted of 5 felonies. 5 felonies. Oh, rigging the precious metals market. Yeah, we only paid $900 million. Shut the hell up. And I'm Jamie Dimon. All right? Where are things going? It's a crime syndicate in every damn country.
Warren Buffett has issued a stark warning about the real estate market, signaling potential trouble for property owners and investors. He points to several factors driving this looming crisis, including skyrocketing home prices, oversupply of housing in certain areas, and rising interest rates. These combined elements, he argues, could trigger a significant downturn in the market. The housing market has experienced an unprecedented boom in recent years, with prices soaring to record highs in many regions. However, Buffett cautions that this rapid appreciation may not be sustainable, and a market correction is overdue. He also highlights the struggles of first-time homebuyers, who are increasingly priced out due to inflated property values. As interest rates continue to rise, borrowing costs are climbing, making home financing more expensive and potentially dampening demand, which could lead to declining property values. Concerns are also mounting in the commercial sector beyond residential real estate. Gerald Celente warns that the commercial real estate collapse could destabilize banks still burdened by pandemic-era cheap money policies. With trillions in commercial real estate loans set to mature and treasury bonds losing value, rising defaults on office loans could strain the banking sector. A weakening housing market and a looming commercial real estate crisis pose significant risks to the broader economy. Financial institutions could face mounting losses if both sectors experience major downturns, potentially leading to tighter credit conditions and further economic instability. As these warning signs grow, investors and policymakers will need to brace for the possibility of a severe market correction. Let's get back to the interview.
I'm not a good market guy. It's not my specialty, but looking at the bigger trends, what no one is talking about, only the Trends Journal, the office building bust. Your office vacancy rate, meaning nobody there in the 10 largest cities, according to Moody's, 20% vacant. The COVID war started 5 years ago, right? Work at home trend, hybrid work. Okay. Now, yeah, people are going back to work, but still a lot of companies say, yeah, stay home. I don't need all this office space. I had 10 floors over there. People are in cubicles. I don't see them anyway. Yeah, stay home and come in 3 days a week. Now the leases are coming up. According to the data, between $2 to $4 trillion worth of commercial real estate loans are coming due this year and next year. There's going to be defaults on these offices. Here, last year, not ancient history, 2024, Midtown Manhattan, 50th Street. The building that sold in 2006 was either 312 million or 320 million, I forgot, went up for auction. Sports Illustrated used to be their offices. It sold for $8.5 million. It's in the middle of the block. No windows here, no windows there, no windows in the back. No, you can't convert them to housing. Buildings built within the last 50 years are non-convertible, according to the data. There's going to be defaults on commercial office buildings that's going to bring down banks. No one's talking about it. The banks got all that dough when they started pumping in all that cheap money to fight the COVID war, trillions of dollars and zero interest rates. So the treasuries that got are worth nothing. They don't have the money to back these losses. Let's go back to 2023. 3 banks, Silicon Conman Valley Bank, First Republic, and Signature Bank. But went bust. Poof, down went the markets, up went gold. That was 3 banks. And this is global, by the way. Canary Wharf over there. Oh, yeah, you don't want to be there anymore, do you? No, leaving. I'm telling you, there's going to be a banking bust that no one's talking about. There are wild cards out there, and they're not being shown. There's no journalism anymore. It's dead, dead. People only watch what they want. They don't have open minds anymore. They're prostitutes. They're media whores that get paid to put out by their corporate pimps and government whoremasters. Oh, need more proof? Look at all the people that Trump brought in from Fox. It's a joke. Oh, now his daughter-in-law just got a job with Fox? I mean, it's one after another. Saki was over the show. She's in the. It's one. They're not journalism. It's gone. So they're not reporting the facts. We're giving everything we can with the Trends Journal.
With financial markets navigating a complex mix of geopolitical tensions, inflationary pressures, and shifting economic policies, gold's resilience stands out. While short-term fluctuations are inevitable, its long-term trajectory remains tied to global uncertainty and investor sentiment. Meanwhile, potential cracks in the real estate sector add another layer of concern, hinting at broader economic ripple effects. Would gold continue to thrive as a safe haven asset, or could market shifts alter its trajectory unexpectedly? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.